Hey, what's up guys, John here. Do you want to know the exact date the American consumer will run out of money so you can position yourself? What I think is going to happen over the next 6, 12, 24 months is we're walking into the greatest wealth transfer of all time.
As inflation remains, it would seem practical for people to want to spend less money and try to save their money, but that doesn't appear to be the case. According to a piece in the Wall Street Journal, Americans are still spending like there's no tomorrow.
We're going to see Americans being forced to fire sale their properties and assets due to the chain of events that are unfolding. You know, in August in 2021, consumers had $2.1 trillion in cash. $2.1 trillion. Now they only have $148 billion per Bloomberg.
Americans have set a new record for credit card debt. For the first time, total balances have topped $1 trillion.
So $148 billion. I'm going to show you the exact date. I broke this down to a science so you can position yourself for this. Please hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's really going on. And if you'd like to fix your credit to position yourself for the greatest wealth transfer of all time, we'd love to give you a free strategy session at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description below this video to schedule a free strategy session. Take a look at this. So, credit card debt has now hit $1.08 trillion. $1.08 trillion. Now here's how the math breaks down. So 2.1 trillion minus the $148 billion, right? This comes up to a total of $1.952 trillion, right? That's the difference between the two. Then what we do is we find out how many months have passed since August 2021, 27 months, which then means that the American consumer is burning $72.296 billion per month. That's what they're burning every single month. And so with that being said, they're spending about $2.4 billion per day. So when you look at how this breaks down, if you take that $148 billion, which is left for their excess savings, you take that and then you divide it by the $2.4 billion that they're spending every single day, it gives you 61 days until the consumer runs out of money. 61 days from now is January 8th, 2024. But there's a couple moving variables here, one of which is student loans. Student loans could greatly move this date up because the average student loan payment is $504 a month. $504 a month, and you're looking at 43.5 million Americans paying these bills, many of which may opt out and not pay it and just allow it to go on their credit report, but many will. And so what do we have? We have higher interest rates on credit cards, more debt, more expenses, and travel for the holidays, gifts. What I believe is going to happen is this January 8th date may move to mid-December, maybe Christmas time, that the American consumer is going to be fully tapped out. Now, Ken Griffin, he is the wealthiest hedge fund manager in the world. He's building a home he believes is going to be worth $1 billion in Palm Beach. He said that consumers are going to run out of money by the end of the year. He said consumers will have they still have an estimated $1 trillion in excess savings left, but they're spending upwards of $100 billion every single month. That leaves them on track to exhaust their pandemic cash hoard in the matter of months. He said this in March. So he said this in March, and that's exactly what we're walking into. Now, you're already seeing a lot of pain that's happening with banks. Commercial real estate is getting absolutely devastated. Here's a great example of this. Look at this beautiful trophy property in San Francisco. How much do you think this property just sold for? It sold for $15 million. That's what it sold for. $15 million at $150 a foot. $150 a foot. You can't build for $150 a foot today, right? So it's an incredible, given that the building last sold for $64 million or $641 per square foot. The $15 million purchase price is a 76% discount to what it last sold for in 2018. The lender and new owner, Cross Harbor, is the latest lender to seize an office property in San Francisco. The sale comes after the previous owner defaulted on a $71 million loan. Their remaining loan balance is $65 million. So you think about it, that lender had a $65 million loan, it sold $15 million bucks. So they lost $50 mil on that one deal. And now, lenders nationwide are looking at the pain happening in commercial real estate. They're looking at what's going on with a lot of the loans in which they issued. They're looking at their assets, their bonds they purchased. They're looking at consumer deposits getting greatly drawn down. They're walking into problems, and so they're tightening up dramatically on lending. Commercial real estate lending plunged 50% last quarter as the market struggles to break out of its logjam, right? So commercial real estate lending nearly halved last quarter, a sign that uncertainty surrounding market conditions is continuing to hammer activity in the sector, according to Mortgage Banker Association. Commercial and multifamily mortgage origination plummeted 49% year over year over the third quarter, with new loan origination declining 7% compared to the second quarter of this year. Mortgage origination declined for all property types and sources of debt capital. The MBA, in dollar terms, the largest decrease was seen in healthcare properties, where mortgage originations plunged 76% from 2022. That was followed by declines in hotel, retail, multifam, and office mortgages, where mortgage originations fell by about half of last year's levels. This sharp drop is likely due to uncertainty surrounding market conditions. Now you look at this. You see this scenario happening, right? Then what we're looking at is this right here. Small business owners. So the credit crunch that I've been warning about is here. The credit crunch I've been warning about is here. Here, this, for example, a survey by Goldman Sachs quizzed small business owners who reported serious concerns that nationwide credit crunch is hindering their growth. Now, I think a lot of people underestimate how severe of a problem this is, because America as a whole, you have 167 million Americans that work. 167 million. Of them, 61.7 million work for small business. So when you have a situation like a credit crunch, you're going to start seeing a lot of layoffs. You're going to start seeing a lot of people, really get pushed to the edge. They're going to lose their job, and with that, their auto loans are going to default. They might get evicted. They walk into other problems. Once you lose that primary stream of income, problems start to unfold. But if you're an investor, you're an entrepreneur, you might see this as an opportunity. There's going to be a lot of disruption, and with disruption, people are going to come in with new solutions, new businesses. They're going to start buying businesses. They're going to do things, because at the end of the day, through the up markets and down markets, there's always winners and there's always financial losers. Sadly, unfortunately, it's going to be a lot of Americans are going to greatly get penalized over the chain of events that have unfolded over the last couple of years. Small business is the backbone of this country. It's the backbone of America. And when we lose access to liquidity for small businesses, we lose a hell of a lot more than just money. So, according to a survey, 78% of small business owners are concerned about their ability to access capital, and 29% say they can't afford to take out a loan given the current interest rates. In addition, 85% say that if access to capital continues to tighten, it will impact their growth forecast. Of those, 67% will halt expansion plans if credit continues to tighten, and 21% would close their business if credit market continues this trajectory. The challenge are even more stark for minority-owned businesses. Black small business owners have a higher application rate for business loans or lines of credit, but have a much lower rate of receiving the full funding requested compared to, So when you look at what's happening here, it's interesting. So you have these layoffs that are really, really picking up. Citigroup, right? Citigroup considering to lay off 24,000 employees, which would combine the banking industry would have laid off 100,000 employees over the last 12 months. You have, Rivian. You have, it's one main business after the next. You have all these tech companies, all these gas companies, all these small businesses issuing all these layoffs. You have to ask yourself, what does this mean? What is this gonna do? Well, when you see headlines like this, it really kind of shows you clearly what's going to happen. People are going to start doing desperate situations. Now, this is Fortune magazine. This just came out a couple days ago. Parents are stealing their children's identities to access debt and destroying their kids' credit scores in the process. So when you have a scenario like this, where parents are being pushed to a place to where they would even consider something like this, and then you have other people saying, oh, we're probably going to have a soft landing. There's probably going to be some type of easy, smooth transition. You have parents looking at their kids as a way to keep the lights on and taking their identities without their permission. You have something really, really big happening here in this economy. I believe that this January 8th target is probably going to be moved forward to mid-December. And as this happens, what you want is you want to be very well positioned financially for this. You want to have great credit. You want to have cash in the bank. You want to have stable stream of income. You want to have reduced consumer debt. These consumer credit cards, It's predatory. It is absolutely disgusting how much they're charging. 30, 32, 33% interest. You use a credit card interest calculator and you put in the amount of debt that you have inside of one of these calculators and you look at how much interest you're paying on your card, you will be blown away if you look at the payments. You show yourself, okay, here's how much I paid last month, here's the total debt owed, here's the interest rate. You see how much money you're wasting in interest if you have credit card debt. You'll be shocked. There's still a lot of credit cards out there right now that will allow you access to 0% APR for between 12 and 24 months, no interest. You do have to have a credit score usually around 700 to get access to these cards, but there's still a lot of options out there. So what you definitely don't want to do is make the minimum payments. You want to really put yourself in a strong position because the next couple of years, next 2 years, next 3 years, I believe is going to be the greatest wealth transfer that we'll see in American history. And you want to put yourself in that strong position so you can weather this storm. You want to have access to capital. You want to have access to liquidity. You want to get, for example, business loans. A lot of people are looking at this saying, hey, I want to start a small business. If you want to start a small business, the minimum credit score for business credit is 680. That was before. Now they're saying 700 or higher. So if you want to get lines of credit for a business, you're going to want that 720, 740 credit score. You're going to want to be in that place to where you can go apply for a card, get 10K, 20K, 30K, 50K, 100K. Get that money, being able to invest it in your business, being able to scale up. The next couple of years, huge wealth transfer. Many people are asleep at the wheel, not realizing just how fast this train is coming. What do you think about it? Drop below. Let's have a conversation about it. If you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, we'd love to give you a free strategy session. A free strategy session will review your credit report with you, tell you exactly what it will take to fix your credit, kind of give you a roadmap and a game plan, and then you can make a decision. If you'd like us to help you, we'd love to help you, and if not, no worries. You won't be charged anything. So if you'd like to schedule a free strategy session, you can click the link below at GreatCreditFast.com to schedule a free strategy session, and I'll see you in the next video.